Good afternoon, Crypto Humor.
All right, man, what's going on? This is episode 40 of the Beef and Bitcoin podcast with your host, Brett and CH. Can't believe it's been 40 episodes, actually. We're recording the 40th, which is pretty insane. Today's topic, single topic episode. Our boy Rekt Capital recently dropped an article just a few days ago, actually, called The Bitcoin Halving, Everything You Need to Know. And after reading it, I thought it would be a good topic just to go over and shoot the shit on, because the halving is coming up sooner than we think in May of 2020. So it's important that, everybody listening, and if you're in this space in general, you should really have a good understanding of, what the halving is, how it works, why it's important, and some of the history around the halvings, and then what that could mean for the next halving. So that's what we're going to talk about today. But before we get started, what's going on with you?
Not much. Another Monday, another kind of interesting day in the markets. The IPOs. I mean, just to briefly go over, basically WeWork, which is a giant shitcoin, another IPO, is basically now, it seems like it looks like SoftBank is going to try to telling them to shelf their IPO. So it's kind of a big deal, because WeWork is, if you follow Uncle Jay on Twitter, follow him. If you don't, you're missing out. Basically, he's been saying since day one that this is a crock of shit, which it is. And it looks like they might not even IPO now, which is a pretty bad sign for the market in general. Like, their valuation got chopped from 47 billion, 49 billion to below 20 billion. I don't know where it's at now.
Yeah, it got cut in half. Yeah, at least.
At least in half, yeah.
Yeah. Yeah. Signs of the times, for sure.
Exactly.
But that's the whole point of doing the podcast, so it's great. But yeah, I guess let's jump right in. So if you get a chance to read this article, definitely take a deeper dive on it. We'll put the link in the show notes for you guys to take a look at. But the first thing I wanted to get into was, what is the halving exactly? So every 10 minutes, a new block is added to the Bitcoin blockchain, and that contains essentially the new group of transactions that have been broadcast to the network. Okay, so currently, miners receive 12.5 BTC in addition to all the transaction fees that are generated for mining each block and adding them to the chain. So that's the whole reason that they're burning up all this electricity, because they're confirming transactions that are broadcast to the network, and for performing that service, they receive the block reward, which is a combination of the block subsidy and the transaction fees. So with the halving, every 210,000 blocks, or roughly every 4 years, the block subsidy gets cut in half. So as of today, right now, for every block that gets added to the blockchain, 12.5 new BTC are released to the miner that adds the block to the chain. Now, in May of 2020, that subsidy is going to be cut in half to 6.25 BTC. So you're going to see that big supply shock come as soon as the next halving starts. So one day, miners will be receiving 12.5 BTC in addition to the transaction fees, and then the next day it's going to get cut in half to 6.25 BTC, which is there's no other asset on the planet that has that kind of that doesn't have a demand response when the supply changes. Pretty mind blowing when you think about it. And then the next halving will be the third halving for Bitcoin, and miners will be competing for even less Bitcoin, which, I think that's when people are going to really start to realize how scarce this is. Yeah, that's a perfect chart right there with the halving event. So as you can see, and we'll get into this, why the halving is important. The majority of the Bitcoin is already in circulation. It's probably more than 80% right now, because when for the first few years of Bitcoin's existence, the block subsidy was actually 50 BTC. Then it dropped to 25 after the first halving, and then in in 2016, it got cut in half to 12 and a half. And now we've been in that 12 and a half BTC subsidy for the last 2 years or 3 years, I guess. Okay. So with that being said, you know, now that you have a better understanding of what the halving is, my question to you is what percentage of retail or even large scale investors have an understanding of what the halving even is?
I'd say a pretty small percentage of people, because a lot of people don't look into that part. They've heard of Bitcoin, but there's a good amount of people that just don't like do a little more digging, understand what the halving is. Or even as you and I have talked before, like Bitcoin's that's just this giant rabbit hole that's opened us up to the current monetary system where we don't read about money, try to understand the history of money and why having a high stock to flow ratio is good comparatively to a low stock to flow ratio like majority of fiat currencies have.
Mm-hmm.
Um, and that's something is, I know, as I said it before, it's something that slips a lot of people's mind. Even some of the brightest investors in the world don't think about how our current monetary system has put us to the point where we are basically, as we said, I was listening to an episode earlier of ours, I think it was like 38 or something, how it feels like we're just on the cusp of something huge. We don't know what's going to happen next, but it's like, it's big. We're going into a whole new decade. Most people don't even think about that. We're going into the 2020s. So it's a big thing that slips a lot of people's minds is how money works, how supply affects demand and, in terms of money. And then you get the inflation side. You have things like gold, silver, and Bitcoin that are less inflationary versus all these fiat currencies. As we discussed on last night's podcast, I don't know if it's up yet, episode 39, a majority of like emerging market currencies, where you're looking at the Argentine peso, Turkish lira, you name it, over the past decade, have been just crushed by the dollar.
Right. And I think that's a good point to when people talk about monetary competition, that monetary competition most certainly does exist. And we see it every day, especially with fiat currencies. I mean, the US dollar. Yeah. I mean, the dollar has been dominating.
A day.
Right. Right. And people don't really think about that. And I've heard people say ridiculous things like, oh, like that money isn't a big use case. And I think that's the most absurd thing I've ever heard. Money is arguably the most important piece of technology that humans have ever invented. I mean, it's 50% of every
Definitely.
voluntary interaction from one party to the other. So when you're talking, and I read a tweet the other night was like, it is the biggest prize ever, to compete in that market of money. And there obviously should be a free market for money. And we live in a very strange time where there isn't a free market for money. But that seems like it's changing as the current monetary system looks like it's crumbling around us as, countries compete to degrade the purchasing power of the fiat currencies over time. It becomes more and more obvious why something that increases in purchasing power over time just makes so much more sense. Like, why would you'd much rather hold, gold as an example, or Bitcoin that increases in its purchasing power relative to like a fiat money, which you lose purchasing power constantly every year. You lose more purchasing power. So I feel like that becomes more and more obvious. But I guess that's a good way to segue into why the halving is important. And, to me personally, I feel like the halving is important because it helps drive home the idea that scarcity is pretty important. And I think human beings value scarcity in some strange
We
way.
do.
I don't
High-end
think
sports cars, art,
oh, yeah.
luxury homes, you name it, collectibles.
Yeah. And when you read this article, he kind of talks more about or frames it in a way that the halving is what's driving the demand and scarcity. And I don't necessarily think that's the case. I think humans, for whatever reason, value scarcity subjectively, and that subjective value that you have for scarcity becomes realized over time. So right now there's a small percentage of people who are like, yeah, man, the supply is getting cut in half every every 4 years, and the majority of it is already outstanding. So that's why you have such a high stock to flow ratio relative to other currencies, and not yet there with gold, but we're going to see it get awfully close after the next halving. It just becomes really interesting to see, even with like rare baseball cards or comic books. Like if you have the first issue of the Superman comic, that's pretty fucking valuable because there's not that many of them around. And it's just a piece of paper, but the fact that it's rare, we subjectively give it tremendous amount of value, which is pretty interesting.
Yeah, I was going to mention something earlier as you were saying about the fiat currency and the money printing. The biggest, the people who benefit the most from fiat currency and printing money are the debtors, the people who are just taking on insane amount of debts, which is governments, corporations over the past decade, where debt levels are at unseen levels ever in history, and they can keep paying them off because they can print more money. And interest rates are still extremely low. Granted, as I said before, when the Fed funds rate went from 25 basis points to 225 basis points, it was a 10x, basically in the span of a year and a half on the cost of lending or whatever. Which doesn't seem like much, but what costs $10,000 now becomes $100,000. What costs $100,000 becomes $1 million, and what costs $1 million becomes $10 million. So it's a big deal.
Right. I mean, yeah, it's just really hard to like think that far ahead. You just don't think it like it's going to happen. I wanted to get back to some of the reasons why the halving was important. So we talked about stock to flow ratio earlier, but I don't know if I did a good job of explaining stock to flow ratio. And basically what that means is the amount of existing stockpile divided by the remaining BTC that's released kind of on that daily basis or annual basis. So the majority of and that's the reason why gold has a stock to flow ratio of like, I think it's estimated to be between 60 and 65, because humans have spent the last 5,000 years mining the shit out of gold, and we've dug up pretty much as all of that we could out of the ground already. So, when the price of gold increases and we start mining more gold, typically that rate of gold that's being added to the existing supply is around 2%. And so it's not that much, right? So the majority of the gold already has been pulled from the ground and already exists, and it's very difficult to increase the overall supply of gold because we've already mined the shit out of it. We've already taken most of it out of the ground. And Bitcoin is pretty similar because the majority of Bitcoin is already in circulation, and there's only a few million Bitcoin left to be mined actually over the next 100 years. And that's going to taper off every 4 years and get down slower and slower. But it's also important because as that block subsidy decreases, that we're going to see again in May of 2020, it's important that the network starts to have increased transaction fees, right? Because the miners are going to need to be compensated for securing the network. So we're going to need to see that shift from the block subsidy paying the miners the majority of what they make for mining a block to the transaction fees supporting the network. And that really means that Bitcoin demand really needs to go up, and the price needs to go up significantly to sustain the amount of hash power that we're seeing. But I'm pretty hopeful that will be the case, because we've already seen quite a few blocks already where the transaction fee was actually greater than the block subsidy. And we've talked about this in the past, the Plan B's model around stock to flow ratio, and he did a really good job showing how he did a linear regression on stock to flow, and it's predicting Bitcoin's price after the next halving to be sometime after the next halving to be around $100,000, which sounds mind-blowing and ridiculous, I'm sure, but it has an R square of 99.5%, which is absolutely insane. And a high R square pretty much means that the linear regression is pretty predictive. And when he applied that to monetary metals, it was spot on. Another 99.5% R squared. So he took all of the stock to flow ratio of gold, silver, palladium, and it perfectly predicted the current prices of gold, silver, and platinum and on all that stuff. And that was like mind blowing to see. It's like, holy shit, like it actually works for monetary metals. And then it's interesting to see that it is working for Bitcoin. I don't know if you have anything else to add for that, but it is pretty.
I was just gonna say we were talking about beforehand when I was reading through the article, like if Bitcoin does 12,000% or 120 times X from its 3,200 bottom in December of 2018, we were in the numbers, and it's north of 350K per Bitcoin, which will obviously be an astronomical number and drive people insane because that's the cost of a house, and people will be pissed.
Yeah. Yeah, it's absolutely insane. And it starts getting into the market cap of gold territory today. By the time Bitcoin gets to that price, I would assume gold will have continued to increase as it is a safe haven asset in this point, at least. That would just be my assumption. But I guess now's a good time to get into, the history of the halving. So in the Rekt Capital's article, he does a really good job at bringing out a couple of facts from the past two halvings and some of those takeaways. So I'm going to go over some of those right now. So the first halving took place in November 2012, and it took approximately 513 days for Bitcoin to rally over 13,000% from $2 at the bottom to the next cycle top of $270, which from an absolute dollar standpoint doesn't sound like much, but a 13,000% gain is wild, absolutely wild.
Yeah, 130x in your money is a good feeling.
Yeah. And then as soon as Bitcoin reached its post-halving peak of $270, the 2013 bear market began and Bitcoin declined 80%. And the bear market was the shortest bear market we've ever seen, and that was just 87 days, and that was in 2013. Okay, and then we move on to the second halving of Bitcoin that took place in July of 2016. So this next one, it took 1,068 days for Bitcoin to rally over 12,000% from $164 of that market bottom to the top of 20,000 that you and I got to live through in 2017, which was completely fucking mind blowing.
Bonkers.
So 1,000 days of bull market is a really long time. And when I sit back and look at it, I'm thinking to myself, okay, well, I got into Bitcoin in the spring of 2017, and I was thinking the bull market was just getting started, but in reality, it had started in 2016 at that bottom. But it's difficult to see. Like we caught pretty much the tail end of that second, or I guess call it third bull market. So these bull markets last way longer than you think, but you have to have gotten your ass handed to you in the prior bull market to like really live through to see the next bull market. So, I mean, I guess you could argue that the bull markets, this next one started already and we got to see the first, 350% move or whatever. But for the next group of normies to come in, they're going to think the next bull market won't have started until after 20K. So I think that's an interesting distinction.
Any other market, this is a bull market. I mean, we went from 3,000 to 14K. I mean,
right.
It's tough to argue. It's just it's interesting because the halving now is all of 9 months away, probably 8 months almost now.
Yeah, I mean it's really coming up.
It's coming up, and it's one of the things we talked about. It feels like the last 2 years have really flown by. Like you're like, oh wow, it was 2 years ago when it was like shitcoin central, and that's
No, yeah, you're right. The time has absolutely flown by, and I didn't. It was funny when you're in like the middle of the bear market, like when we were.
Time screeches to a halt.
Oh man, it's like it's so slow.
Oh dude, yeah, 20
feeling so much pain.
The second half of 2018 took a while.
Yeah, it was rough. It was really, really rough.
I don't think most people's hopes and dreams really weren't crushed. Like when we rallied in the spring of 2018, it was like, okay, maybe we'll get something here, and like
Yeah.
we pinged 10K, and that was like that's when I was like, well, fuck, we're kind of screwed here. Um, and that was the case. Obviously, we went from 10K all the way down to 3,200.
Right. Yeah. I mean, it was brutal. Bear markets are brutal, and
Dude,
like
crypto
there's no
Twitter,
other way to
it's
get
so
around it.
funny how you remember how active Twitter was? Like crypto Twitter was so active
Oh
uh
yeah.
in the fall of 2017, summer 2017, and then it just became by the May of 2018 it just died. I mean, it absolutely died.
Yeah. I mean, to be honest with you, it's still dead, and
Oh, it's 100% still dead.
I'm even noticing just with engagement on, the crypto humor page and the beef and Bitcoin page on Instagram, it's still pretty dead. I mean, people still have really heavy bags that they never got rid of. They didn't do any homework in the bear market. They probably lost a shitload of money and watched their net worth um, go into six figures and then way down, and they just didn't really do anything in the bear market to learn what they needed to learn to get ready for the next bull market. And they'll come around obviously when the price breaks new all time highs again. But it is what it is. If you made a mistake, you have to fucking
Learn from
just
it.
learn from it. Like pick up your sticks and hop back on the horse and let's go. At least that's what I did. I spent all of 2018 reading every single thing I
Yeah.
could on Austrian economics, the Bitcoin standard, as many Medium articles as I possibly could, and then all of a sudden you're at this conclusion like, okay, it it's going to work. Could take a long time. I have no fucking clue how long it's going to take, but fiat money is fucked for lack of a. I just don't have a better way to say it, and that will come to an end at some point, or there's going to need to be a repricing event, but. And maybe Bitcoin fills that role, maybe it doesn't, but something will.
Yeah.
And that's where you just have to
Well,
really
as
have sat down and done your homework.
I think I might mention on episode 39, but Raul Paul Pal mentioned, the scary thing about, and it is in a podcast I was listening to him speak about, like the monetary transition, that whatever is coming up next, you hope it's not the current system collapses and we have to figure out a new one. You hope there's some kind of transitioning period.
Yes, yes.
Because like if tomorrow fiat money becomes irrelevant, basically, that's a huge issue. Like everything we know, global trade, banking, you name it, is all done,
Yep.
and
Stops.
economic activity halts, comes to a
Right.
screeching halt, which is scary. Um,
No, yeah,
like
it's super
like
scary.
Hong Kong's definitely in recession. You can't argue. No one can argue Hong Kong's not in a recession now. I mean, people aren't working, people are protesting, and it's killing. I mean, I don't know how big of a tourism spot Hong Kong is. I assume it's decently big, but obviously, I actually have a buddy who planned a trip. Like he messaged me yesterday about it. He's like, "Yeah, I'm going to Hong Kong like in a week." I was like, "Yo," I told him to be careful. It's like, but they planned it in advance prior to the protest. Like it's just something probably planned
Yeah,
like at least 8 months ago or something. It's like, well, shit, going anyways. We bought our flights, but still, it's like,
yeah,
um, it'll be interesting to see where all this geopolitical tension winds us up. Then whatever comes next, I don't think this fiat system will make it through the 2020s. I doubt it. Even 2025 seems like a stretch for me. I think they're going to have to start implementing something. Obviously, we've seen gold being repatriated around the globe by multitudes of different countries. Russia and China have been stacking gold like crazy. Is that
yep.
are they looking to do something when when our fiat currencies become really really irrelevant, because they are in free fall, and it's a lot worse than most people imagine.
Yeah, no, I think you nailed it. And I remember Raul talking about that. I think it was with Dan Tapiero,
Yeah,
and Dan was kind of talking about like the guy's bullish on gold, but now he's also super bullish on Bitcoin. And he went down the rabbit hole in 2018 and told Raul, he's like, you better take another look at this. And he said the same thing you just said, that you're going to need a parallel financial system to be built so that you can transition from one to another, and hope that it doesn't get too messy, because going from the fiat system just collapsing and then trying to figure out the next system will not be fun for anybody. You want to have those on ramps and different infrastructure being built so that Even you personally, you can take, your own sovereign self and kind of transition into that new system, and everybody else is just going to have to play catch up. Um, but yeah, I wanted to touch on a few other of these takeaways from the first two halvings that I didn't mention. Um, these are pretty obvious in hindsight, but it's important to take note of. So the price has historically risen leading up to the halving and many months after the halving. The Bitcoin price has reached new all-time highs, typically after the halving, some months after the halving. Both cycles have seen minimum of 12,000% returns, which is completely absurd. But the big difference is that it's taken twice as long for those that 12,000% growth to happen. So on the first halving, it only took 500 days around to get to that 12,000% growth, and then that next bull market that went all the way into December 2017 took 1,000 days. So that's round up, call it like around 3 years. That's a pretty long time. So I don't know that that means the next bull market that I'd say we're currently in, if that's going to last, 3 years into the future. I have no clue.
Yeah.
None of this stuff predicts what's going to happen in the future, but it's just interesting to look at what has happened historically.
So I mean, if technically if we ran for 3 years, we'd somewhere in 2021, I guess, the end of 2021, it would, be the end of that run, and that's, I mean, that really isn't that far away. That's 2 years away.
No, when you put it that way, I guess that's not as far away as I thought. And if you think, we know the halvings May of 2020, and one of the other takeaways was that the majority of the exponential growth happens after the halving. So if that's sometime after May of 2020, and you still have another year of bull market left, yeah, you're right. That starts putting you towards mid 2021, end of 2021, and bring that back to the beginning of 2019. It's a pretty long time. I mean,
Yeah.
that's 2 straight years of bull market. Although living through the actual bull market, I mean,
Well,
like, it seems like it's been insane even the
well,
past like couple months.
yeah, even like in the 2017 bull market, we peaked at 3,000 in early June, went all the way down to 1,800. So it was like, 45% down in the span
Right.
of 6 weeks or
Yeah, it's
less. It was
insane.
a month, total of 4 weeks, and then we went from 5,000 down to 3,000. So there again, that's 40% chopped off, and then from there it went pretty ridiculous. But even then, if I zoom in a little more, there was one more pretty big sell off in 2017. I think around like 7K or 8K, if you remember correctly. Like we
Yeah.
dumped pretty hard. Yeah, it was early November where we dumped from like basically 8,000, 7,800, whatever, down to 55. And then it was a rocket ship from there. It didn't matter because everyone at Thanksgiving wanted in.
Right. Right.
Dude.
I think I'm gonna be more like aware of that the next time around. Like when your barber's talking about it, or
Yeah,
it's
more
like common
aware of.
conversation at dinner. Like, I'm gonna be like, all right, I'm going to start mentally preparing myself that like the top is getting closer, and prepare to hold my bags for another couple years. Because that's when everybody was really starting to talk about it, and just people who you wouldn't expect to talk about it were talking about it.
Oh, yeah. No, dude, it was like, as I've said before on this podcast, I have people coming up to me telling me how they bought Litecoin at $100, and I'm just like, and I'd be out at bars, and I'm like, what is going on? Like, it was like over, like the Thanksgiving was a huge, you
Oh,
got
it
to
was insane.
change. Yeah. And then
Yep.
it's like, I was back for 2 weeks of school before finals, and I was like, everyone, and I know you experienced it tenfold, if not a hundredfold with me because of your social media followers, the amount of people that were just like trying to, hit you up for crypto advice. It's just like going through the roof. So yeah, it's
Right.
definitely something like next time, like, okay. I'm sure it was pretty similar during the internet bubble, the tech bubble, people with, so
Yeah, yeah, right. That was like before my time. I mean, like, I was alive for it,
I
but
was alive,
uh,
but a
I
little
wish I
younger.
would have. Yeah, I wasn't fucking trading on E-Trade. I don't. E-Trade probably didn't
I
exist,
think
and like where
E-Trade
you
did
could.
exist. I'm pretty sure.
Yeah, yeah. That's a good question. I'm not sure. I think my dad participated a little bit, but I doubt he made any money, to be quite honest with you.
Founded in 1982, but I feel like E-Trade.
Yeah, I don't know when they started like their internet brokerage where you could like really trade online. I'm assuming people are still picking up the phone and calling their broker to
Oh,
place
definitely.
trades.
That's such a crazy thought, like how much
It
it's
is.
changed. Even when I like first really got into like stocks and investing, like it changed so much from the past like 20 years ago.
Yeah, I mean, well, now it's on your phone. It's gone from
Yeah,
computer to phone now too, which is also very mind blowing.
yeah.
Um,
You trade from anywhere with your freaking cell phone.
yeah. All right, yeah, but then I guess the last piece that we wanted to get over and the go over, and the last piece that Rekt Capital talks about was, okay, we've talked about what the halving is, we've talked about why we think it's important, we've talked about some of the key takeaways, but what does that mean for the next halving? So, let's talk about it for a second. So, the next halving is expected on or around the 17th of May, 2020. So, I mean, it's really coming up. It's taken Bitcoin over 260 days to rally 340% from, 3150, 3200 bottom in mid-December 2018 all the way into that peak of call it 14,000ish in June. So that means, and this is an interesting point, that the Bitcoin's price bottomed approximately 519 days after before Bitcoin's third halving, which is very similar to before the second halving. Again, that's not necessarily predictive. That's just a fact that's what's happened for the last two halvings. The price has typically bottomed 500 days around before the next halving that's coming up. So, and they mentioned a shakeout in the article, and I posed this question to you. So each time we've kind of seen this shakeout leading up to the halving. Do you think we're going to see that again? Do you think we're going to
I
hit
think it's
that
inevitable.
15K? Yeah,
I
right.
mean, we've only came, if you say 14K was the top here, the local top in June, we've only came maybe 25% off, a little more than that, maybe 30 some percent off it. So or yeah, it's like 33% basically.
Yeah.
Um, I would say I wouldn't be shocked to see it go from, even down to 7K. That would put us 50% down from that 14K top at this point.
So you think we're already in the shakeout, or do you think we have one more shakeout to
I
go?
right now we're trading that range right now. We're trading that triangle, whatever everyone keeps talking about. I mean, everyone's talking about. I'll make it on the chart. It's just this triangle everyone's been talking about. Bitcoin has been pinging back and forth, and it's just consolidating more and more. And what happens next, I don't know.
Right, right. You know,
Um,
I mean, I'm not much of a technician and don't don't claim to be, but I don't wonder if we'll see that the halving talk, because nobody's really talking about the halving that much. At least like the plebs aren't talking about it
the
too much. So
plebs.
I don't wonder if we maybe we break out of this triangle, make another run towards that 14 15K range, and then have like an emergency pullback or dump or something, that one more shakeout. Um, who knows? I mean, I always think that there's going to be one more shakeout or pullback, or at
It
least
never
I'm always,
happens.
yeah, like I'm always like ready for it. And sometimes it doesn't happen, and you're like, oh fuck. Like a bunch of people who were not buying at 8K this last run up because they thought it was going to pull back, and then we went straight to 14K and then never got back
Yeah.
below 9,000 pretty much. So like you can really miss your marks trying to, predict what's going to happen, and it's just
Well, as
it just goes to show you,
Peter
like
the
it's
Grand
unpredictable.
says,
Yeah, yeah.
and is a classical chartist. He said the pattern doesn't matter until it's complete,
Right.
until price breaks out to like it's technically a descending triangle, which is bearish, but it doesn't matter until price breaks out below. If price doesn't break out below and breaks out to the upside, the pattern's invalid, as he says.
Right.
Um, so I mean, sometime probably come early October, we'll figure out what happens. That's what it looks like right now. Until then, expect to ping back and forth between basically 9,400 and 10K, and just watch it get tighter.
Yeah, that's one. Yeah, as it consolidates,
As
when
it
it like
consolidates more.
oils up, it's like super scary because the last time it did that last year when it was at 6,000, everyone was like crossing their fingers, hoping
Oh,
it
we
would
all thought it
pump,
was, we were like, oh,
and
we're
then
gonna
it didn't.
jump, and then it
Yeah,
just like I remember
yeah.
one day I just like looked at my, I think it was at like Starbucks, and I like just took it. I was
That
just
was right around when we started
yeah,
recording.
literally we started recording like a week or two later after that,
Yeah,
like at Bitcoin at 4K or something like that. But yeah, it was probably like 2 weeks later. But anyways, it literally I remember just looking at my phone and it was like Bitcoin was like at 5,500, and I was like I just started laughing. I just started laughing. I was like, oh great. And you just
yeah.
looked at like all the alts. Like Bitcoin was down at like obviously a lot. It was down like 8, 9, 10%. But all the alts were just wrecked. It
Oh
was
yeah, it
just
was
like I looked at the. I was like,
bloodbath.
oh, that's not good. That is, yeah, that was the capitulation there.
Yeah,
I mean, we halved in price. We went from 6K to 3K. I mean, in the span of you know a
not
month.
long. Yeah, couple,
It was
yeah,
literally a month. It might have been
yeah.
just a tad more, but
So I guess I have another question here that I wrote down. So, we've both taken a look at B's model, stock to flow. Um, I wonder, do you think just the simple fact that the model exists now and people have looked at it and they have a tangible price that they can look at, do you think that changes anything? And what I mean by that is, do you think there's an off chance that we could actually front run this next halving? So, in other words, will we break new all time highs prior to the next halving for the simple fact that the model now exists and people can have a better understanding of it?
and wasn't it, if I remember correctly, we never broke the all time high until after the halving, right?
Correct. Correct. And we've never pumped this fast off of the bottom
No, that's
after
what
after capitulation. So,
I mean.
and it's hard to say because if that article never came out and we never had the
It
model,
seems like a
would
long time. I don't mean to cut you off. It seems like a long time, but it really isn't to the next halving. And if you think if we do go down, we go down and retest the 7K level, we might squander around for a while. And
right.
it really, I mean, like here, I'll put a line in the chart just so you can see, like it really isn't that far away. I need a vertical line for, there we go.
Yeah.
I mean,
Yeah. It's no,
here's,
it's
it's
not
really,
far
when you
away.
look at the chart, and you're like, oh wow, it's really not that far away.
Yeah. No,
You're like, oh, a couple
it's
weekly
really not.
candlesticks.
Yeah, yeah. If you
Oh,
think in weekly candles or monthly candles, it's not
yeah,
that far
it
away.
really isn't. And when you think about like how long it takes for price action to develop, and human greed and fear, it really isn't that far. I mean, things take a while. Bitcoin's obviously in crypto is a lot faster than traditional markets, as
Right.
we've experienced recently.
Yep. No, it really is. Yeah, I found myself thinking about that the other day. And, I'm definitely of the thought process that the halving is absolutely not priced in because not a lot of people know about it and have taken the time to really dig in and figure out what it
Yeah, I
is.
understand it.
But on the other hand, I mean, I've priced in the halving, and I think everybody who has priced in the halving is the reason why we're at 10,000 today. Because in reality, when I'm stacking sats, I'm front running like the 2024 halving and the 2028 halving because like my time horizons at minimum a decade for this for Bitcoin specifically. So it's priced in by a really small percentage of the market, and there's a high probability that maybe we don't breach new all-time highs before the next halving this time around because just not enough people know about it. But if we do reach that six-figure mark, anywhere above six figures, that's when you start getting into that $1 trillion worth of market cap or multiple $1 trillion in market cap for Bitcoin, and it starts competing for real as a safe haven asset. People are really going to need to do their due diligence. And when I mean people, I mean big money people, whether that be institutions, family offices, high net worth individuals, your friendly boomer that you work with who has like, a couple million in liquid assets. Like they're going to take a second look and start making these comparisons with other assets in similar size. And then I don't wonder if maybe having after next, so when with more people that have a better understanding of what it is and how it works, that the halving, I mean, that we don't start front running. I mean, why wouldn't you? You know the halving's coming. Now and you realize it's scarce as fuck. Maybe you're going to start front running that. And I think we saw that a little bit in 2019, but the next halving hasn't happened yet, so we're gonna have to wait and see.
Yeah, we're getting close, as we said. Like it's gonna be here a lot sooner than we think. And as much as you said, like people might be front running it, I think there's a huge block of people that don't even understand Bitcoin, besides for the fact that it goes up a lot.
Yeah, that's like all that they know.
Yeah, they're like, oh, it goes up. If I buy here, it'll be more tomorrow or something. We're not at that stage yet, but maybe soon we will be. Who knows? Anything's possible. I try not to, because black swan events are completely unpredictable.
Yep.
And so, if equity markets like U.S. equities tank, where does that take Bitcoin? Where does that take silver and gold and other precious metals? I don't know right now. I mean, obviously you'd like to see them go up, but then again, if we're in a deflationary period, that's a whole nother, bucket of worms that we can dive into about, monetary supply or global money supply.
Right. What assets are you willing to give up first in order to just kind of survive, feed your family, and all that stuff? It's interesting to like kind of see human action at work and what people are willing to do in those tremendous times of uncertainty. And I'm feeling pretty fucking uncertain right now, which is why I'm trying to hold as much cash and Bitcoin as I possibly can, just because things are so uncertain. And some of the Raoul Pauls, the Dan Tapieros, those big macro guys are starting to have a closer eye on this, and they're starting to hedge accordingly and look towards safe haven assets. And you can, for the average person, they can just look to gold and see it. I mean, it's plain as day on the chart that gold's breaking out and heading back towards.
Gold's broken out in every other currency besides like the U.S. dollar. Like it's when we look at other charts, like gold versus the yen, gold versus a bunch of other currencies, it's in price discovery mode at all-time highs, or just off the recent all-time highs. It's only the U.S. dollar where it hasn't been there yet, really.
Right.
I think, like gold to the British pound, let's see where that's at. Yeah, see gold to British pound's at new all-time high.
Right. Yeah, it's a good point to think of. I always think of things in terms of U.S. dollar.
I mean, that's what we always do.
Yeah.
No, yeah. It's a good way to wrap it up here.
Yeah, no, it's a great way to wrap it up. So, make sure you sit and do your homework on the halving. We'll put this article in the show notes. Read through it, start to understand it. Reach out if you have any questions. Don't forget to like and subscribe to this on YouTube. If you can share this with any friends or anybody that you think would appreciate it, definitely do that. If you have a minute to leave us a review on iTunes, that would be fantastic. It really helps the podcast grow. Keep sending us your feedback. Let us know what topics you want to cover. Makes it a lot easier for us to prep for the next episodes. But, as we said last time, stay safe out there. Keep learning. Get a job, make money, like try to just survive.
Save your money.
Yeah, save it, man.
Don't spend it on stupid things.
Yeah.
There's way too many kids who spend it on, at least my age, that spend it on vacations, going out, blowing money at clubs, and don't think about it. But it adds up. So be smart with your money, because the people who are ready to buy things during the next downturn will profit immensely at some point down the road.
Yeah, I think that's a great way to finish it off. But thanks again for listening. Peace.
Thank you. And please leave likes and reviews and ratings. Thank you.